You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for the option block. Your favorite, hopefully. It's your favorite. If it's not, well, then we got two of them a week, so you're doubly disappointed. Of course, the bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting network. Got a bunch of shows up there if you guys check out. You guys know how to find them. Probably by now, the mothership, theoptionsinsider.com, or whatever platform you're listening to this on. Could be iTunes, could be Stitcher. If you're in those and you're just listening to this show, first off, upgrade. Do yourself a favor. Upgrade to the full network feed. I know a lot of you listen that way already as well, but there's a bunch of you coming in all the time new who are maybe just discovering these programs hither and yon and saying to yourself, I had no idea. There's a whole new world, to quote Aladdin out there, of new shows for you to discover, 15 to be precise. So head on over to the main network feed, just type that into the search bar, and you're good to go. And then, of course, you get all of it. And if you have our app, you're listening to all that pretty much already anyway, because it's all there in the app. In fact, the app may be one of the easiest ways to get the full back decade worth of content. I think even on our website for the full network feed, it's so huge, it's so massive, we had to kind of truncate it. It was breaking the website. So the app may be the best way for now to get the full primordial history of the network going back a decade or so. So check it out if you haven't done so already. Of course, a nice little bonus for you hardcores out there. You can join us every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern via the old Mixlers, MIXLR. And you too can listen, hear how the sausage is made live, give us fun, witty comments in the chat, and all that good stuff. Best part, you don't have to wait until the next business day to hear the show itself. You can get in there and hear it going out live. And of course, however you listen live after the fact, whatever you do, hit us up. We do like to hear from you guys, especially on Mondays, because it's Mail Block Monday. That means you guys get to take the reins in a little bit. But before we do that, let me welcome on my other cohorts who are itching to express their own opinions, starting off with he might not be in St. Charles right now. I don't know. He's off in his mobile RCM mobile out there. So who knows where he's hanging his hat. He is Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome to the show. And where the heck are you today, sir?
It's an undisclosed spot. It's like the missing link back in WWF 80s. I'm from parts unknown today. Great to be here. A lot of exciting things happening in the market today. Can't wait to talk about them.
Yeah, the permabull in you must be just super excited out there for today's activity. And also joining us, a voice you may not recognize. It's been so long. It's been years, decades even, since he's joined us on the old network. He is the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the program. The meatball's been kind of elbowing you aside a lot lately, but now I see you fought your way back into the spotlight, sir.
I think, was I here Monday? I might have been here Monday. I'm not quite sure. Well, the meatball, he's going to get his airtime. So I will pop in where I can in my vast comings and goings.
Well, if you were here last Monday, it would have been quite a feat because it was a holiday. So maybe you were here, and that's why we didn't hear you, because you were the only one on the old show. But all right, with the team assembled, we're going to get right to it and dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, everybody. Welcome to The Trading Block. This is indeed the portion of the show where we break down Uncle Mike's happy place, a.k.a. all the green on the screen, all of the indices well up to the north again. You know, it's hard not to fault them, or hard to fault them really for pushing these things up today. Like I said, we are recording this, streaming it live on Monday, September 11th, usually an auspicious day. Today, perhaps a bit of an occasion for a little bit more celebrating. Some people had hoped. There was a lot of hand-wringing going into the weekend. Of course, the rumors about potential tests, more tests coming out of North Korea, as well as the certainty that was Hurricane Irma. It was setting up to be a pretty devastating storm. They were talking 10 to 15 foot storm surges there on the west coast of Florida, things that are almost unprecedented and would have been just catastrophic if they came to pass. And then lo and behold, none of that really came to pass, at least not to the degree that everyone expected. You know, there was storm, there was water, there was certainly people without power, but the massive devastation a lot of people had been expecting certainly did not come to fruition. And as a result, there's some green on the screen today. Some might say well-deserved green on the screen. A bit of a sigh of relief, and an enthusiastic sigh of relief on the old screen today. S&P and pretty much everything else up about 1%, a little bit north of that in the Dow and the Qs. And of course, all this happiness, all this effervescence, all this green means red on the old VIX screen, off over a handle, actually a handle in about a third or so. For those percent of percent junkies, I know you're just typing into your screen right now. I'll save you the time. Percent of percent, it's about 11%, close to it. The meatball's not here, so we can say all that stuff all day, which is fun. Right around 1080 right now, so shy of the 11 handle, flirting perhaps with single digits, but we all know that's probably short-lived because there's more lurking out there. There's Jose and all sorts of other fun stuff just lurking, saying, wait about me, don't forget about me. So interesting stuff pretty much across the board. Since you haven't been here in a while, and because you think you come on holidays, Mr. Rock Lobster, you're so excited. Let's get you on now. A lot to talk about what's been catching your eye in just this storm of rally, storm pun intended, storm of rally, and of course downside in VIX and all the other things that have been playing out over the last today's session and a lot of the other ones you missed too.
I think it was the Monday before last I was talking about. That's the one.
Ah, okay.
Anyway. You know, it's one of those rallies today where the VIX is in the 10 handle, but you have a 1% rally. So, probably a good day to sell skew, I would say, selling like downside puts or creating little flies and things like that down there. However, I'm not quite sure what happened over the weekend. Obviously, there was I don't know if it's obviously, but there's a big relief, a huge relief rally. I don't know if it's going to sustain. I mean, we're all over the 2,500. I mean, we're only 12 handles away now. So 2,500, it probably will happen. You know, if we just have any kind of decent news, I think the biggest thing was NASDAQ and banks bounced really hard again. There was some worries about interest rates staying low again, and there was some conflicting messages, and and the hurricane wasn't as bad as everybody thought, thank gosh. So that makes life a lot easier for just about everybody, really. But it's amazing how fast the VIX has been going back to 10. The only thing I would say though is, we have a fairly steep contango, or just those VIX futures in October are still pretty pricey. They hung around close to the 14s right in the open, and they kind of slid through the rest of the day. But still, a pretty good markdown from where they were. But they have not given up the premium in the October future just yet. So FYI to yourself, the volatility in VIX is still there, but it's still in the futures.
It is there. What also is there is the trucks that are roaring by Uncle Mike's mobile office over there. So we'll work on seeing if we can get some of that mitigated while the Rock Lobster, he's just not loud enough to talk over the semis. I think Uncle Mike hanging out at a truck stop today. But that said, Uncle Mike, in between the semis and what have you, what is cooking in your neck of the woods, and what was catching your attention today?
Well, I agree with Andrew. I think this was a relief rally today. with everything that could have happened over the weekend, it could have been really ugly over the weekend with any one of the major things that in the macro level of which we were talking about happened. Today it was a nice rally. We're up roughly 1% in the S&P, but it's not. I think the risk reward. I remember looking at this on Friday. I actually took a bunch of deltas off the table on Friday, and my thought was that if we do rally over the weekend, it's not going to be a ton. But if we come down, it could be a ton. So I wanted to err to the side of caution over the weekend. Now, if we break 2,500, as Andrew suggested, that's probably the point to where I'll start being in a little bit more of a rally ho mode. So I guess I'm only a 95% bull right now, if that makes any sense. But I think that with what's been happening with with Irma, and the fact that Jose has not hurt us yet, we still have that uncertainty that we have to come to grips with in the near future. I still want to see a little bit more. I want to see us break and close over 2,500 in the S&P before I get back to my 100% bull mode and I say my beloved statement, which I'm looking forward to saying, and I hope I get to say soon.
It's getting up there, sir. We're getting close. We're getting close to that level. We're flirting with those highs and those top of the charts kind of numbers. Speaking of the top of the charts, I think it was, Kiplinger put out these people do different rankings for online brokers out here all the time. And there's, obviously, Barron's does theirs. A bunch of people do them, but Kiplingers is an interesting one. And they just put out some numbers recently. I thought it was worth bringing it up to kind of have a fun discussion about this. Because Kiplinger obviously looks at it maybe from a little bit different perspective than we do here on the program. They picked I believe their top 7 brokers here, and it might have been 8 because I think they had a tie for number 1. Number 7, let's just go in order from the bottom to the top. And Kiplinger, by the way, they look at stuff. They're looking for commissions, first and foremost, followed by investments, investment options, pun intended, how many things you can trade, the tools, research, ease of use, mobile access, and advisory services. Those are the categories they're looking for. Obviously, we come to it more from how good is their options platform, how good are their tools, how much option savvy do they have, and of course, are their commissions reasonable and their margin and everything else. So number 7 on the list actually is Ally. Our friends over there at Ally, you guys listening to the network are familiar with them. Brian beams to you every week on Options Playbook Radio, giving you some nice strategery, to borrow an Uncle Mike term, over there. And it's funny because they put them number 7 on their list for a bunch of reasons. They like their commissions first and foremost. That was the big thing that they really liked. They only gave them 2 stars out of, I guess, 4 or perhaps 5. 5 out of 5 stars for breadth of investment choice, which is interesting because actually from that category, I would put Ally a lot higher than some of these other ones on that list because from our perspective for options, they do a lot for options. In fact, they talk to you guys every week about options. So they offer a lot of content and they have a lot of options wherewithal over there as opposed to a lot of other brokers that perhaps don't. So interesting that they would only give them two stars for an area that, and they go super crazy for the commissions, which they really like. But I think they probably should get a little bit higher just because they do a lot more with options. Now, for our perspective, this is kind of funny. Number 6, which I put above Ally, is Vanguard. And I think for all of us here, from an options perspective, if we had to choose trading options at Vanguard or trading, I think we probably would all, or excuse me, Ally now, so known as Ally. We probably would all choose the latter. And yet they get 3.5 stars. Of course, because Kiplinger obviously also very focused on funds. They really want to have access to a lot of funds, mutual funds, and low-cost funds. So if you don't offer a lot of that, they kind of give you, they ding you in that sense. So Vanguard, and to their credit, I've talked to the folks over there at Vanguard. They're trying to do a lot more in the options space. I think they just need to convince some of the senior management, the old guard at Vanguard, that still likes to do things perhaps the old way. They see options as a bit of the new kid on the block, maybe, and they're not so comfortable moving into that space yet. But there is some inertia internally over there at Vanguard for some more options love over there. Number 5, interesting how low they put them. I think a lot of people here might rank them higher. Is TD Ameritrade. TD Ameritrade actually getting they're getting a lot of love here. They ranked high but the reason they ranked it high was for their research offering an ample lineup of no transaction fee mutual funds. So that was what they really liked. No really word on how and they only got they got 4.5 stars for breadth of investment choice. So that's probably a good one there. Even though I think a lot of us might put them higher. A lot of people listening like to use Toss. That's one of their favorite platforms. Number 4, E-Trade. course, E-Trade, a lot of these are conglomerates now. TD Ameritrade has TOS. E-Trade now has Options House and Monster and all that stuff. E-Trade coming in number 4. They get 4 stars as well for breadth of investment choices. I'm sure that acquisition last year really helped to boost that score quite a bit. Before that, E-Trade not really a place you would go for options. These days, I mean, the platform integration is still undergoing, so it's kind of hard to say for sure, but seems like they're putting a lot more emphasis on the products we care about, which is good. The reason they put E-Trade so high, ironically, is for their mobile app, which lets you run stock research on it. Number 3, OX and Charles Schwab. Obviously, we were familiar with those. They get the highest rating for the breadth of options, pun intended. They get 5 stars. So interesting stuff there. I think a lot of us know because the OX brings a lot of diversity to the table. But Schwab has also had a decent options offering for a long time, even prior to the acquisition. They probably had one of the more challenging migrations. In fact, they were just on our network not that long ago at the OIC conference saying they're still, I think, 4 or 5 years in now. Still hoping to finalize that integration sometime this year. So that's been a long one, bit of a torturous one, I think, for a lot of people looking from the option space and wanting that functionality to come over to the mothership of Schwab. But it seems like that's finally highest. They also got the highest rank, again, for its available investment choices. I think that's a bit of a nod to the OX arm there, bringing a lot more life to that. And the number 1 spot was actually a tie with, ironically, our friends who were on the show last week, Fidelity. They tie with number 1 with Merrill Edge, which is interesting. Not a platform we really talk about a lot here, or pretty much even at all on this network. Maybe we should talk to those guys or bring them on the show, give them a chance to chat a little bit. Kiplinger liked them for research and tools. They kind of got a low ranking, only 3 for their breadth of investment choices, which is understandable. They're not known to be an options stalwart out there. Well, Fidelity, as you saw from them coming on the show last week, they're trying to, I think, stick a new flag in this space. They see the value in the option space, and certainly in the options clientele. They know you guys are active, you're rabid for trading, you have bigger accounts, you usually are more knowledgeable about the space, all the kind of things they want in a client. So I think they're starting to wake up to that fact, and that's a good thing, I think, to see. So interesting stuff. A lot to debunk here, or maybe discuss here. I know there's some obvious glaring omissions for us here who are in the option space. We don't see, obviously, IB on this list anywhere. They're obviously a big go-to choice for a lot of you guys out there who are very active and like themselves some active brokers to go along with them. I know you guys, Mr. Rock Lobster, you like to do a lot with the former Live Vol guys, now Lightspeed. They offer a lot to the very niche options audience out there as well. So there's a lot of other players that wouldn't be on this list, but are still kind of interesting. Uncle Mike, I know you deal a lot with IB. What are your thoughts about A, maybe their omissions on this list, and B, how would you mix up this list if you had to write your own?
All right. First thing I want to do is I'm going to reveal a deep, dark secret from inside the brokerage marketing industry. When I worked at Options Express many, many years ago, I remember I was in the marketing department. I was part of the education arm of the marketing department, but I remember being at a meeting and we were just kind of discussing things, and they're like, oh, yeah, the Barron's article's coming out in another couple months. Yeah, we got to throw them a lot more advertising dollars. So magically, Options Express decided to buy a lot of advertising with Barron's right before the judging would come out for the brokerage contest. So not to say that there's anything wrong with that per se, but just kind of take these rankings with a grain of salt. A couple things. First off, in terms of IB not being on the list, IB is something to where if you're a very advanced option trader and you're looking for a specific platform, I think IB is a good fit for you. If you are more on the retail side of it, I don't know if it's necessarily a great fit. If I were to all of a sudden get the head coaching job for the Chicago Bears and just be a private option trader and not manage money again for the rest of my life, just my own money, I probably would not have any money at IB. In terms of a couple of other things that are on there, I think Schwab, it's very impressive with the things that they're doing recently with lowering commissions in general. I just saw that they have a new Schwab S&P index fund out there that's only 3 basis points. That is dirt cheap within the investment world. So there's a lot of things that are going on. And then with Ally, I think that they have a lot of great things going since their acquisition of Trade King. And I'm with you. I'm surprised that they are not of higher rank. And with Vanguard, I guess I'm not familiar with anything that they do on the derivative side of it, so I really couldn't comment much on that. So interesting reading, but once again, I would recommend take the actual rankings with a grain of salt.
Yeah, amazing how those ad dollars tend to pour in right before the big rankings. But you're right. Vanguard kind of, I think, for most options players, a bit of a non-entity. Yet, ironically, I think the one guy who trades options on them is my father. He loves to trade options on Vanguard. He's the only guy I've ever known to have done so and continues to do so, and despite my protestations to the contrary. So there you go. There are some diehards out there who like to write covered calls using Vanguard, and they do naught else. Endlessly frustrating for me, but that's a conversation for another day. Mr. Rock Lobster, your thoughts on this list and the many permutations and variations potentially therein?
Well, I think the thing, we're option traders, so it feels like that list is geared toward people that want to buy mutual funds or something.
Definitely, yeah.
I'm not.
So we have to tweak it a bit for our options audience.
You did. I think you did a good job of trying to figure it, massage the rankings for the options. I mean, literally, because at least from our clients, they're all pretty active. They have decent size accounts, and we have our top 3 platforms for those people. So, but I don't think any of the top ranking ones there made it. At least for what my clients like to use. But if you only buy one mutual fund a year, then probably some of these other ones are better for you because, honestly, your needs from your platform are vastly different that somebody wants to see, 2 Voltics in the SPX. That is a different level of need from your platform for sure.
Yeah, a different beast entirely there, and interesting stuff. I think that we have a lot more. I think the Merrill Edge thing that they got bumped to the top 4 first was kind of an interesting combo, taking advantage of the synergies of being part of Bank of America. Obviously, now if you have at least $50,000 in combined balances at the 2, so you can have a bunch sitting in a cash account if you wanted at Merrill Lynch or at Bank of America and still get up to, I think, 100 free trades a month or 30 free trades for that level up to more. So that would cover a lot of people out there. So if they combine the bank accounts and the trading accounts, that's kind of an interesting bonus. And that's one of the reasons why I think Kiplinger boosted them up. Again, Kiplinger, not in the option space really, but interesting to see how, shall we say, the broad financial community weighs things versus us here. I think there's obviously a lot of debate to be had. We probably spend the whole show arguing about this. I got a feeling you guys will hit us up with your ideas. We'll probably come back to this again. We got to get to the odd block. Otherwise, we talk about this more, but we'll table it for now as we see what your thoughts are. I'm sure they're probably already piling in. And then we'll get back to this, I'm sure, very soon. But now it's time to keep on rolling with the weird stuff. It's time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is, of course, a portion of the show where we break down the weird and wild. It doesn't get much weirder than good old Tesla. Let's just kick it off there, because this usually we kick it off there because these puts are crazy, and the puts are crazy again today. But Tesla, what a weird one today. I see people tweeting into us right now. I bought a call for $350. I sold it for $880 today. Yay! What a great thing. So yeah, good for you. But just crazy town out there in Tesla yet again. That's saying a lot because Tesla always crazy town, but up 6% almost today. Another 20 handles, back to 363. So all the guys, I was talking to someone else this weekend, diehard put seller in Tesla. I'm sure he's got a bit of a smile on his face again. And once again, his puts go to zero. It's amazing how just nonstop it is. Of course, if you're wondering why it is, you're not a Tesla follower, a lot of love being drawn out there because China talking about potentially putting the kibosh on gasoline engines. And as you know, Tesla doesn't make gasoline engines, they make electrics. And so a lot of people saying this is the beginning of a huge new era for Tesla. One listener, a couple of people actually pointed out something interesting to us. Which is totally true. Which is, and because a lot of people are writing about this, Bloomberg and others writing about this very hyperbolically, as you want to do when you talk about Tesla. That Volvo is a Chinese manufacturer. There's a bunch. They have some electric cars coming out. There's a bunch of other manufacturers. The notion that China is just going to turn around and just buy a gazillion Teslas is probably not that well founded. But still, it is a net bullish, I guess, notion, and certainly, I guess, worth 20 handles on an already lofty thing. But still, just all sorts of craziness out there to go on. Like we said, 20 handles, the volume kind of off. Actually, the volume not as robust as you might think. You might expect today, you might get a 2x, 3x over ADV. Actually, it was almost exactly at the ADV. It's averaged about 167.5, and today did about 166.9. So almost exactly at its ADV. And surprisingly also, no real heavy bias towards the upside. Usually today, the thing's launching up. You got to scramble. You got to get your deltas. You take them any way you can get them. You buy up these calls. Not really seeing that out there today. Pretty much close to a little bit, 1.2 to 1 calls over puts. So weird stuff across the board. Speaking of weird, our crazy puts continue to trade. 254 more of these 2019 50 strike. Yes, 5-0 catastrophe puts. Even on a day like today, stocks up a whopping 20 handles, and these things still trading up a storm. I had someone complain to me over the weekend, these things are expensive. I was like, yeah, they are. Not quite as expensive as they used to be, partly thanks to today. They're trading right around 60 cents right now. They were trading well north of that a while ago. So I guess if you've been buying these, perhaps a bit of a sad face for you. But still, interesting stuff nonetheless. We got more to talk about. I'm sure you guys will hit us up with Tesla ideas too. This is just another crazy day. We can always call it the Tesla block, just for the odd block, how much odd stuff goes up in that name on a given day. Let's move on to some of our other big names. Well, first off, really quickly, Mr. Rock Lobster, I'm sure your crazies out there were slinging some Tesla today in your old pit chat.
You know what's funny? We ignored Tesla somehow.
I didn't think that was possible in a chat room full of crazies.
Well, it kind of opened up quite a bit and just spent the rest of the day getting higher. And I think everybody just stares at it in disbelief sometimes. Because maybe Elon Musk knows something nobody else does. But like I said, it's hard to bet against that guy. He somehow comes up with ways to get it done. But I would just assume the current value of Tesla just assumes they're going to sell a bunch of cars to the Chinese.
Yeah, you're right. I mean, that valuation is pretty lofty. You got to assume other people outside the U.S. are buying whatever small fraction they could make. Like they could even produce enough to feed the Chinese demand. It's a lot of assumptions built into that number, but c'est la vie. We're not here to debate. Someone wrote in asking us about our thoughts on Tesla valuation. We're not going to get into that. That's a whole other show, a whole other day. Let's just mention how crazy it is and keep on rolling. Let's move on to some other names that are kind of crazy today, including the PowerShares DB US Dollar Index Bullish. Say that 5 times fast. Ticker symbol, OOP. UUP, closing today $23.86, up about 0.75 of a percentage point or so. This is the name that does about 8,000 contracts a day. Today doing a little bit, a tad, a smidge more than that. Yes, 231,000 contracts today. 227,000 of those coming in the calls, only about 3,800 in the puts. If you're wondering where all this crazy call palooza was, you got to scroll down a bit to find it. It's all the way out there in the Jans. Once you see it, it'll leap off your screen at you because it's pretty much the biggest print in town. It's the Jan 25-26 vertical. Started off, we noticed some blocks of about 25,000 going up. Paper looks like hitting the bid. Actually, at the time, it was below the bid for the 26s for 2 cents, and looks like scooping up probably the 25s for about 12 cents, doing the whole thing net for a dime. As the day went on, we saw a total of a little more than 100,000 trickle in on these strikes, so 4x on those blocks. So a lot of size going up on these bad boys. If that wasn't enough, we also saw 10,000 of the D's 25-26 vertical going up today. That one, by the way, open interest on the Jan strikes is pretty much nominal compared to the value that the volume that they put up today. Nowhere near those numbers. So opening clearly in Jan. D's actually, it's pretty size open interest on both of those strikes, well more than 10,000. So potential for some closing there. Maybe our friend decided to close out in D's and just go with a gusto out in Jan. Either way, those trades were not exactly at the same time, so it wasn't like that was a spread. But it is coincidental to see so much size vertical, and that particularly in the exact same strike going up a month apart. Interesting. Perhaps makes me stroke my chin and say, out there, the year that's been out there, it's been a crazy year for anything that kind of has been tracking the dollar. That's the same for this UUP. Peaked back in right around the beginning of the year, actually, right around Jan 3rd, actually, was right around the high, about almost 26.80. And then it's kind of been on a slow, inexorable decline ever since, bottoming out very recently right around the 23.70 range or so. So close to the low end of that range. Mr. Rock Lobster, let's kick it off. Let's see if you remember how to do this. It's been a while. Obviously, someone wanting to get the party going here in UUP, liking themselves some U.S. dollar index bullish. What say you, sir?
I say, do we have a little bit of a treasury rally lately? There was some serious worries about the whole interest rate picture since the beginning of the year. I don't know. It's because maybe everybody doesn't like who's in Washington or whatever, and they're running out of the dollar, or they didn't think that we're going to get that rate raise that everybody thought. But somebody looks like they're scooping themselves some, it looks like anyway, they want to get long and as long as possible the dollar. So I kind of like it. It feels like the dollar's been, I guess it's anything else. It seems like how long can the dollar go down for when, Europe is still I still think the U.S. still doesn't look bad relative to some of the other interest rate scenarios you got in Europe and Japan. So, but at some point that had to the decline had to stop or at least slowing down. But somebody's buying January and they're looking at it's like one of those trades where just because it has to slowly melt back up. They don't need to do it tomorrow. So probably the right time frame for what's going on.
Indeed, the right time frame. Speaking of which, I haven't had a chance to pull it up myself today and check, but you mentioned, of course, the Fed and everything. They were saying today that they were looking at the CME Fed Watch tool, and the soonest you can find, I should say, a 50-50 roughly coin flip for a rate hike is next August, I believe. So I'll have to pull up those tools and check it out for myself. I haven't had a chance before the show, but interesting if that is indeed the case, because they were pricing in some stuff going into December of this year. So interesting that that's apparently, getting pushed back a little bit. And we've been talking about that before on the network, but to see those numbers so starkly in contrast there in the Fed Watch, kind of interesting. I'm sure we'll get to that more on TWIFO later this week. Meanwhile, we're staying though in the currency kind of dollar land. This time getting in on the CurrencyShares Euro Trust. FXE is the ticker, closing today 115.5, right about off about a little over 0.5%. This is the name that does about 11.5 in terms of contracts a day. Today doing about 50,000, doing pretty well, about 12, a little over 12 to 1 calls over puts. And what we saw out here was a bit of a diagonal roll, call it what you will. It was the DEES 113. Jan 120 diagonal going up here, 20,650 times going up with the DEES trading for 375, right around or near that, hitting, not quite hitting the bid, but getting close to it. And then the Jan 120s trading for 89 cents, also same, actually a little bit more, 20,850. They got 200 more on the latter kind, doing those right around or near the ask. Worthy of note here, about 41,000 contracts open on the old DEES versus pretty much only about 1,000, 1,200 or so open on the Jans. Also worthy of note, like I said, the FXE closing today, 115.5. So these 113s are looking a wee bit meaty. Perhaps our friend here deciding to, discretion time, all the better part of valor, giving themselves a little bit more upside to play with, and also perhaps coming in with a smile on his face, because if he was indeed long those bad boys, perhaps looking out here. All right, let's do a quick scan to see if we can see when those mostly popped. Looks like they've been open for quite some time. They've been open back a while, as long back as this screen goes. So that strike's been been a lot open there for some time. Someone being a patient puppy there in good old FXC. Speaking of patience, let's look back at the year that was here in FXC. This thing hitting its nadir right around 101 or so back in December, actually hit a low of 100.5 back in just kicking off the year, January 3rd, actually, and it's slowly been on the march ever since, flirting with its highs of the year right now. Mr. Rock Lobster, what say you to our friend? Do you think he's a happy camper doing the old up and out but keeping the party alive, or you think there's something else afoot here?
I'm feeling the party needs to be kept alive with this one. I know, again, I'm not the best currency follower, but I have a hard time believing everybody wants to get back on the euro train, but apparently they do. So, you got the Brexit vote. It seems like the European Union is what they survived Greece, that Brexit vote. They somehow can always kick the can down for a while longer, and the Brexit thing has gone by. The French don't feel like leaving, so it's just one of those things where I guess they're going to figure it out. I don't know how it's going to work out because there's a lot of fiscal deficits, but it's not borrowing any of the currency buyers, and maybe it's just time that there was just a giant unwind of long dollar and short euro, and now everybody's piling in the other way. I think looking at between the UUP and FXC, I mean they're going in opposite directions, which generally what happens with those. So maybe I think it's certainly smart for the person to take the house money and go, though. That feels like it feels like you want to do that at this point.
Has been a good run. You can't really shake your finger at them and say no. That's if it's indeed he's been sitting on those bad boys for a while. It appears like he has. Then perhaps a good time to get the heck out of Dodge. But also he's not quite done. He wants to keep the party going. A little bit farther out, a little bit farther up. All right, moving on to our final name. What a diverse array of names we got going on here today. We start off in the currencies, and of course dollar. Then we end up in a relatively cheapy biotech. This is Array Biopharma Inc. Ticker symbol ARRY, ARRY. Closing today right around 10.5, off about $0.50 or right around 4%. So not the best day here for good old ARRY. These cheapy biotechs, they have a lot of volatility baked in. It's kind of the nature of the game. This thing, I should say, doing about 3,000 contracts a day. Today, about 28,000. So pretty decent paper. About 7.5 to 1 calls over puts, and that's where we noticed some interesting paper, doing some big blocks coming up tied to stock, starting off the set 9 calls, trading 12,173 times for $2.15, right smack dab pretty much in the middle of these relatively wide markets, as you might imagine, some of these names. Doing it, looks like tied to stock here. Open interest on the strike about 14,000, so it does have the whiff of some closing paper out here. It is worth noting that about 10,000 of these were opened a little bit more than a month ago, back on August 8th. At the time, they were done for 50 and 55 cents. Also done buy right, so effectively done tied to some stock. If it was indeed tied to the stock was much lower back then, around $7.90. So depending on how you're looking at the options, of course, you got to remember that stock leg. The options, he's off quite a bit if he was indeed buying stock and selling the calls. But on the flip side, he's looking all right on the shares, even though a much lower delta. I think it was around probably about a 14 delta back when those went up. So probably maybe in the ballpark of like 170,000 shares. We'll have to dig in and see precisely. But still, interesting stuff. Now these are, as we mentioned, in the money calls. So delta a wee bit higher than a 14, shall we say, on these bad boys. With today, actually, yeah, as you might imagine, close to 100, about around 95, with not much time left to go in these bad boys. Also worth noting today, worthy of note, easy for me to say, or worthy of note today as well, some more call paper, this time going out on the D's 12s to the tune of 5,000, trading for 75 cents on these bad boys. Open interest there, negligible. So it could be our friend perhaps deciding to close out a tide print and then later on reestablishing on the D a much higher strike. So going from a 9 to the 12 is a big roll. But again, this thing's been moving quite a bit. Looking at the charts out here for the past year in this name, as you expect in some of these cheapies, it's been quite the roller coaster. It got as low as 363 actually about almost 3.5 back down in September, almost exactly a year ago. And then since then, it's kind of been flirting in a very binary fashion as these biotechs and farmers are wont to do, gapping up to 6.5 not that long after that, then trending all the way up to 13.5 back in Feb of this year, and then flirting with those levels not that long ago again. In fact, just on the 8th, it hit $12. So this thing has kind of been all over the place over the last few sessions, and our friends here liking themselves, certainly liking the vol out here, doing all these tide trades. Mr. Rock Lobster, take us home. What are your thoughts on these tied up blocks of calls and perhaps the stock leg they're in?
Hard to know exactly on this one, I have to say. They feel like kind of buy-righty, meaning they own some stock and they sold some calls. It just looks with this sell-off today, maybe somebody was trying to get out of those the SEP9 calls, maybe that they were short. But not sure if they were short them or not. It's too hard on the tightest stock. I'd had to see what happened to them. But even 50 cents versus wherever it is on a ratio, they should have made some money. If they bought them, if they sold them, they would need to be 1-to-1. So I'm trying to catch what that initial trade was. 170 deltas though on 10,000 shares. Or I'm sorry, that would be what, a 14 delta option. So
14, yeah.
Yeah, they should have made some money. If they sold them though, I think they might be a little grumpy on that one.
Yeah, I have a hard time feeling it doesn't seem like a sale. It could be. Obviously, anything's possible in the odd block. We've seen odder things. But you're right, it has a feel of picking up some stock and going the other way, dumping the calls. Interesting stuff nonetheless. If you're selling shares down there, I guess more power to you. Hasn't worked out too well on that front. All right, let us know your thoughts. A lot of weird stuff printing. Meanwhile, though, it's Monday. It's time for you guys to take the reins. It's time to open up the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Like the man said, this is where we answer your questions. Sometimes you answer some of ours, which is also fun. We ask you guys questions every week. We call it, hence, the question of the week. Last week, we asked you guys, Q4 is looming, where you guys placing your bullish volatility bets. And I remember the show, I think on Thursday last week, I think it was Sebastian just slamming, who the heck would want to buy gold vol? And of course, what happened after that? Gold vol shoots up our list. Didn't quite win, but it ended up finishing in a strong second. Yes, we gave you the choices of gold vol, crude vol, S&P vol, aka VIX, and single name vol. So your Amazons, your Teslas, your whatnots. 32%. It was a lot higher. It was over 40, I believe, at one point. But once Sebastian started denigrating gold vol, started climbing up our charts. 32% for the VIX, 29%, close second for gold vol, 22% for crude vol, and only 17% for single name vol. Maybe today's move in Tesla may make you reconsider that. But that said, VIX once again leading the charts. We'll see if that happens again this week. This week we asked you, hey, a lot of bad stuff swirling out there. You got your Harveys, your Irmas, and Jose. I think there's another depression behind that. So a lot disasters are on people's minds. Of course, you got the fires out west. So we say, we prep our houses, we prep our cars, prep our families for disasters. What do you do to prep your portfolio? We gave you 4 choices. There's obviously a lot more we could have added. Some of you guys are already chiming in with those, but you could have 100 choices. We gave you 4. First off, we said you want to get long some vol. Could be, we didn't care how you do it. Could be VIX, could be VXX, could even be UVXY, whatever your flavor is. You want to get long some vol. Or you want to just say the heck with them, going to cash or my T-bills. Or maybe you want to stay long, but you're getting a little bit cautious, so you buy some index or some individual name puts. Or last, you put, in quotes, because we tend to take a dim view of these being risk assets, but they call them risk assets, things like gold. So put those there for you as well. Mr. Uncle Mike, let's see if if the semis will leave you alone here over there. What is your choice of these 4, and then what do you think our audience is choosing?
I'm actually going to go with gold, and I'm going to go with double gold for me and the audience.
Uh-oh. So huge surprise, sir. I never saw that coming in a million years there. Uncle Mike actually was on with me on TWIFO last Friday talking silver and gold and all things metals. So the man likes himself some metals. So 2 votes actually there for gold. the AKA the risk assets. Mr. Meatball, what say you, sir? I got a feeling I know how you're gonna stake your flag too, but you never know. What are you feeling here?
I am the cohort of the meatball. I'm not exactly the meatball, but that's close.
Did I call you Mr. Did I call you Mr. Meatball? I'm sorry. He's been horning in. I call him the Rock Lobster. I call you Meatball. It's just what I do, I guess.
We're even for me thinking that I was working on last Monday. Anyway, so
it can never be even. Can never be even, sir.
You it's your show. We will never be even ever. So I would say the bulk of people probably buy some puts, index and stock puts. But I would maybe prefer some VIX call spreads into it, maybe then dump them dump them prior to whatever the landfall is or anything like that. So that's where I'm going.
Interesting. A split vote here. And it's kind of a split vote for our audience so far as well. You're right. About exactly 33% saying so far they want to buy index or stock puts. About 27% saying they want to get long themselves some VIX or some VXX or other appropriate products in that category. And a tie for number 3, cash, T-bills, and gold coming in both 20%. And, of course, gold could also be other assets in there, too. Whatever you want to lump into that risk assets. Already got people like Jack chiming in saying, I want to buy Home Depot. I get you. We were going to try to put in some of those builders. We're going to try to – there's just not enough room to put the builders and lumber futures, all those kind of things. We can go down the rabbit hole with that. So we kind of kept it to these main 4. But, yeah, I'm with you. Those are also could qualify these days as disaster prepping your portfolio, little HD exposure out there, or pick your poison low, whatever you want to do. All right. TT wants to know, what does it mean when an options trade is listed as SPIM? SPIM. We talked about these before, the trade codes, trade tags, trade conditions, call them what you will. We have, in fact, if you search for them on our website, we did a whole episode of Options Bootcamp about this very topic. Mr. Rocklobster also wrote up a few articles about that, so you can search for all those, find them on the Options Insider. We get into them in great detail. I don't know if we got into SPIM so much. It's one of these weird opera codes. You can pull it from a lot of brokers. I pulled this off the IB site, but a lot of them will have this. The opera code for SPIM stands for a transaction where the execution of an order was stopped at a price that did not constitute a trade-through on another market at the time of the stop. So stopped, but not exactly at some crazy out-of-sequence price. That's what they're looking for. They say you should process it like a normal transaction, but don't update it on the last. So a lot of minutia going on in there. Mr. Rocklops, I know you like yourself some trade tags. What are your thoughts here for TT, who's confused by SPIM? I don't blame him. It's a weird acronym.
It is a weird acronym. In the old days, there really weren't very many trade tags. I think there was there even spread up?
That was about it, because you only traded them in one place, right? You didn't need all this nonsense of trade throughs and stoppages and everything else.
Right, but I think the reason now is because of interconnected markets, and the brokerage want to give a reason why something trades at a price and somebody doesn't get filled. So they have to, there's lots of time, in the old days there was size takes precedence and stuff like that. And now you have to kind of clear out the customer book. So people want to know what's the reason why they don't get filled. And now they've come up with a endless stream of acronyms to let them know why that has happened.
Yeah, if you want to spend some quality reading, maybe you're having a hard time sleeping at night, get into the trade tags. We broke it down for you. We have, like I said, a whole hour-long show doing just that. So you can listen to it as you gently drift off to sleep, which you might because A, the Rock Lobster's on it, and then B, we're talking trade tags. So, but if you're interested in stuff and you listen to this, you probably are, then it's good to at least know what the heck those little tags are when your trades go up, because it could be weird and confusing. All right, let's see what else we got here. Oh, Salman Azar. He was excited to be his question was featured on the show last week. He said he was honored to have a question in the best podcast on stock option, the Option Block. Well, you're welcome there, Mr. Salman. We like to have listeners like you who send us great questions. Keep them coming. Let's see. We got let's see. We got a few more minutes here. We can probably squeeze. This one's a long one here, so we'll hold on to this one maybe for a little bit later. Sometimes it's hard to read what they're trying to actually say. Let's try this one from Mr. Mubs. That's like the handle, Mubs. Mubs wants to know, what must I analysis? I think he means analyze. What must I analyze before buying an option? A lot to unpack there. Grammar aside, a lot to unpack there. Mr. Mubs, Mr. Tusa, I should say. Someone's coming to you like Mr. Mubs. He says, "What should I analyze when I'm buying an option?" We only have a few minutes left, so we'll do the condensed version. What would you tell him?
Step 1, determine what your sentiment is on the stock. Step 2, determine your time frame on the stock itself. And then step 3, determine which option strategy would work best for you based on step 1 and step 2. If you are looking to trade volatility or some other aspect of it, then that's a much longer answer. But if you are looking to trade in the option based upon your sentiment of what the stock is, follow steps 1, 2, and 3.
I like it. Concise, to the point. Well done. Anything to add there, Mr. I almost called you Mr. Meatball, Mr. Rock Lobster?
No, I think that's the most important thing because of options is time and basically, velocity of the underlying. So if you want to buy calls, you need the underlying to do its thing while you own the calls. And what Mike mentioned too, you can just add volatility, how high the volatility is to make sure you get performance out of the upside of your calls. So like we said earlier, when you're trading something like Tesla and the stock moves 6% in one day, you can pretty much almost buy anything for a 6% move in the underlying and win. Although that's 6 times 16, so that's over 100%, volatility for one day for Tesla. So that's what a 100 vol move looks like, would be a little over 6% for Tesla. Normally, stocks don't do that, so you have to be mindful of how things are going to happen. The only thing I would add is where you put a stop on the call you buy, and what it takes you to exit so you don't get zapped on your entire call premium. But actually, we'll be covering that on our class on Thursday. Speaking of that, but I like Mike's answer. I thought it was a good way to approach it.
Well done, sir. Well, good questions, everybody, too. We got some long ones here, so we'll try to squeeze those in maybe on Thursday. Keep the questions coming. We get a bunch. We try to answer some. If we can't get them on the show, we try to answer them, on Twitter or wherever you write to us, email, whatever the case may be. Some of the interesting ones we surface up as well. I just like saying Mubs, so he got bumped up. All right, so a lot of questions. We'll get to more on Thursday. We got to keep on rolling with our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Welcome to Around the Block. Like the name implies, this is the portion of the show where we tell you what we're keeping an eye on for the rest of this week, at least until we can all gather together around the old option block campfire. On Thursday, we, of course, going into the weekend, we mentioned at the top of the show, we had a lot to keep an eye on. We had, of course, North Korea. We had the will they, won't they of Irma. How bad will it be? What damage will be? Now it seems like some of that, at least for the time being, North Korea never quite in the rearview mirror, but Irma, seems like we know what we're getting there. Of course, we got Jose lurking and some other things, some questions whether it'll be as dangerous or even hit in the same area. So all that's still up in the air, but a lot of interesting stuff to watch. Let's start with you, Mr. Rock Lobster. This is the portion of the show, in case you've forgotten, sir, where we tell what we're looking at. So what are you looking at for the rest of this week?
I think that a couple of key things is if VIX can maintain where we are and we watch sort of those VIX futures start to just drift a little lower, maybe we could see that 2,500 number. So I'm kind of looking at that. So basically, is the volatility confirming our move? Is VIX moving up? And because usually that means people are coming in and saying, yeah, I like it, we're going to 2,500. They sell a bunch of puts and that crushes VIX. So that could be a precursor to more rally. If we actually do believe that all the crazy of August, it was funny. VIX it rolled into August at 9, and it had probably our bounciest month all year. So that's what I'm looking at for this week.
Uncle Mike's getting knocked off his seat. So before he gets knocked off, Uncle Mike, what are you watching for the rest of this week, sir?
2,500, I think it's a key number at this point in time, besides everything else that was just mentioned. Of course, we have Jose is the wild card factor with the weather at this point in time. And then we have all the other wild card factors that are going on all around. So I think the main thing that I am going to be laser focused on is the 2,500 mark.
does seem like we are in a bit of a wild card market and have been for some time. It seems like any given day we could have X number of wild cards just thrown into the mix, and all analysis, everything else is just thrown out the window. Interesting stuff. Unfortunately, that music, listeners, means we come to the end of another epic journey through the world of options. Talked all things crazy rallies and Tesla. Talked about some of Kiplinger's choices for the top online brokers. Gave some of our thoughts. I think we have more thoughts to share on that issue. Probably will soon. I'm sure you guys have thoughts as well. What should have been on? What shouldn't have been on this list? Why doesn't Kiplingers care about options? All these fun things. Hit us up with your thoughts. There, talk some UA and all sorts of other fun stuff. Answered a bunch of questions. Got a lot more in the hopper. If you haven't gotten yours answered on the show, write and hit us up. We'll get to it soon. Don't worry. We get a lot of them. But we like to make sure our listeners are happy. And before we go, though, let's check back in one last time with our cohorts, our partners in crime, see what they're cooking. Start with you, Uncle Mike, before you get run over by the semis there as you're standing in the middle of the road doing the show. What is cooking in the land of RCM? And if, for example, I saw this list of brokers and I said, I like all those names, but those ticket charges aren't doing it for me, what can I do?
You can call me and I can aid you in getting rid of those evil ticket charges. Give me a call and we can work something out. And you can trade in the RCM umbrella at a particular broker, depending on which one is the best fit for you. And we can work things out for you. And also, if you are looking for a financial advisor that is not afraid of the word Vega or the word row, feel free to give me a call. I'm more than happy to work with you. Even if you just got $100 a month to throw in, I am more than happy to help. Because most of my clients are online, I can give the kind of service that you would normally have to pay a very large percentage and have a very large amount of money to get. But you just got to work with me over the phone because, this is a nationwide show. Call 312-212-3531 or shoot me an email at mtosaw@rcmfs.com. And as always, I will throw in a $100 gift card to the option pit if you end up becoming a client of RCM.
I guarantee you, listeners, you're going to go out there, you're going to find another advisor out there with Uncle Mike's skill set for $100 a month. Forget about it. You're getting huge guys out there charging you $2 and $20 to do a hell of a lot less. They ride the market up and they ride the market down. They won't babysit your puts for you overnight. Hit the man up, mtosaw@rcmfs.com to learn more. And last but not least, Mr. Rock Lobster, you alluded to your upcoming webinars. What you got cooking for us, sir, over there in the land of the pit?
Yes. Well, if Mike's not managing your money, you might as well come to us and see how to trade options. We have Thursday evening. We're moving our normal Saturday classes, which people like, but they said, can you do them on a Thursday night or something like that? Because we want to have our Saturdays to have fun and get your class live. So Saturday class, and we'll be on surprised directional trading, learning how to use options and volatility to help with improve your risk reward profile, looking for a directional trade. So basically all it is just how to position for direction based on the market conditions you're given. And that also helps your performance.
There you go. Check it out, optionpit.com. Got to hurt with the branding, though, to have the Saturday webinar on a Thursday. Very confusing, I would think.
It does. The Saturday class, everybody likes them, but everybody's like, can you put them on a weeknight? So we will have to change that, our branding thing.
There you go. Join the Rock Lobster and the Meatball for a Saturday webinar every Thursday. And hey, Thursday is our show day too. So if you're around ahead of time, you want to get some of your learning, some of your education on a little bit early, tune in to the old option block and we can get you covered there as well. So on behalf of Uncle Mike and the Rock Lobster and indeed myself, I want to thank all of my easy for me to say. I want to thank all of you out there for downloading, streaming, and subscribing to the show, and of course, sending in such great questions. Keep them coming. We love them all. We read them all, try to answer as many as we can, and we'll see you on Thursday for more of the Option Block.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.